There was a time where people said you should have 25% of your net worth into gold, which I'll be honest with you, I find scary. Because when you think about, and we're going to start talking about its role in your retirement planning, when you go into retirement, what matters most to you? Meeting your goals, meeting your inflation-adjusted goals, which is mainly producing income. You could have other goals, legacy, charity, but that's your goal. And if meeting your goal is your primary purpose, what do you probably value more than anything else? Predictability.
Welcome to the Healthy and Wealthy Retirement, where your certified retirement counselor, Mark Struthers, takes a holistic approach to retirement, going beyond finances and embracing holistic well-being. This YouTube channel will address not just the financial part of retirement, but also the social, the physical, and the emotional parts of retirement. Everything you need for healthier, a wealthier, and a happier retirement.
Welcome to the Healthy and Wealthy Retirement. My name is Mark Struthers, and I hope your spring is going great. Today we are talking crypto. Crypto in your retirement account. Does cryptocurrency, in any way, shape, or form, most often Bitcoin, belong in your retirement account? And this has been a challenging subject for me for a while. I think it's changing some. And not for the reasons you probably think. It seems like crypto has always been you're either with us or against us on both sides. I find both sides to be at times nasty, if I can say that word. That if you're pro crypto, if you even, I won't even use that, if you are open-minded about crypto, you're stupid, that this is simply a mirage, it's a con, it's tulip bulbs, and we'll talk about what that means in a minute here. And for the pro-crypto folks, it's unless 100% of your portfolio is in crypto, that you can't see the future, that you're a fool. And it goes without saying, I don't like either side. And it's also, I think, challenging for some retirees to deal with all the noise. And I think this podcast will help clear things up. It'll help you make a better decision. And that's what financial planning is all about. So if you're looking for a detailed, wonky tech dive into crypto and stable coins and some of these layering payment platforms and contract stuff, you're in the wrong place. But we are going to go through a basic pro and con of the arguments for crypto. I have found that those who don't really understand it, when you do that, they get a sense of what it is. You don't have to know all the ins and outs of your investments, but you should have a basic understanding. And a common theme that we talk about is if it is overly complex or you don't understand it, ask you yourself or your advisor, do you have to have it in your portfolio to reach your goals? And that is especially true in retirement. So let's first talk about what this digital asset on something called a blockchain, what are the potential uses for it? Why might it be in your portfolio? And what do the pro folks and the anti folks say about it? One, as a currency, cryptocurrency. And the promised land, what is kind of still hoped, is that having transactions without financial intermediaries. That if we can, with lower little cost, lower little friction, transact, move money, not just across town, but across the world, it could be a wonderful thing. That would free up capital and time and commerce, that we would be so much more productive. Think about how we allocate resources. Anytime you have friction, kind of an artificial barrier to getting things done. And you think about the underbanked, quite often the poor here in the US or in the world, it could be really something. So The anti-crypto folks at this point would say crypto is too volatile to be a currency. And it's hard to deny a mainstream currency that they're right. Is crypto still used for some transactions? It is. But how many of you go down to your local coffee shop and buy your cup of coffee with Bitcoin? It's too clunky. And the coffee shop, frankly, probably doesn't want to take it. And you could guess why. There's a local coffee shop in Excelsior, Minnesota, beautiful little town on the lake, cute little downtown. They have a fancy coffee shop called The Lobby. My son and I really like it. We often will run around there and then have something called an orange espresso tonic. Too expensive to have very often. But if we went in there and we bought two of them, and believe it or not, they're actually $7 a piece. That's before tax and tip. And we paid with Bitcoin. The owner of that shop could take that. We'll say we're generous with our tips. We'll say we gave them 20 because there's high school kids working there. My boys are teenagers. Well, one's 20 now. Well, the owner would take in that $20, and if his profit margin was 10%, we'll say 10% on the coffee, so $1.50. Well, the value of that Bitcoin from the point where he took it in the morning to the afternoon could drop by the time he actually turned it into something that he could use, or even if he's painted Bitcoin, could drop 10%. So the volatility, this is where the anti-crypto folks are correct. It's been too volatile to be a mainstream currency. Could that change? It could. Could there be other crypto, Bitcoin, Ether? Could there be other things that maybe are lower volatility? It could. It seems unlikely at this point. What does seem likely, once you dive in, is some sort of stable coin. And there are different types of stable coins. The ones that seem the most stable are the ones that are backed by a main economy's currency like the US dollar. There are some issues with some that were yielding, that were pretending to offer a yield, like a bank account type yield of like 10, 20% a few years ago. And as you might guess, it was fake. Anytime you run across that as an investor, if something is being sold to you that is so out of the norm, dive deeper. It's not that you can't get 20% return from something, but if you do, there are risks involved. And if something's being sold as being risk-free. So, but that being said, the idea that at some point there's a stable coin where we can transact at a very low cost across borders, but it's still backed by the US dollar, which again, one of the pro crypto things is that we need to operate outside of governments, outside of financial institutions. But that being said, that's still a good thing. There still could be value there. The other FYI for those of you that are curious, one of the issues with us having a payment system like this is that it's got to be able to operate under stress. That if there's a lot of people selling or buying or just selling, and you see it with our financial markets, that's where the true test will be at some point, is if we do have a very stable currency type system on the blockchain, can it perform well during bad times, during COVID, during 2009, whatever the case may be. So both sides are kind of right here. If you want to go, if I had to call it, I'd say the anti-crypto folks are right. It's not yet a currency. At this point, it doesn't seem likely. I think it's changing, but it doesn't seem likely that it will be a mainstream currency anytime soon. But again, that's changing. The other purpose that this might be an investment is that it's a store of value, and some would say a hedge against inflation. If it is, it could be coming, or it is already an asset class. If you were to look at where is the value of Bitcoin now, why is it worth $100,000? And it could be that it's a store of value. It also could be that you just have, and this would be that would be the pro. The anti-folks say that it's not really acting as a store of value. It so far it hasn't been an inflation hedge. They would say that its value is simply because people are speculating and they're buying it because other people are buying it, that you have this momentum, and this is why they would also say this is why you had the crash. It was in 2018. And certainly in 2022, Bitcoin seemed to be more a risk on, risk off trade, that it would go up when equities went up, down when equities went down. So from that standpoint, the anti-crypto folks were right. The question is, are they right going forward? As more and more companies or even governments start to use this, you could get to a point where its scarcity has value like gold. Why is gold worth what it is? And I knew it at one time, but certainly has some value, a small value, I think, with manufacturing, but I think it's small, especially when you look at other commodities like silver. Jewelry, same thing. I mean, certainly it has some value with jewelry. But gold is worth what it's worth because people say it is. And specifically, governments and people view it as a store of value, as a reserve currency. And they often say an inflation hedge, although if you look at its performance during some inflationary times, since over the last 50 some years, since kind of we went off the gold standards, that's tough to argue. It's also tough to argue that that you can pound the table and say that's going to be that going forward. I think there's actually a portfolio now called the permanent portfolio. Harry starts with an M. Markowitz. I think he was a libertarian candidate for president, but there was a time where people said you should have 25% of your net worth into gold, which I'll be honest with you, I find scary. Because when you think about, and we're going to start talking about its role in your retirement planning, when you go into retirement, what matters most to you? Meeting your goals. Meeting your inflation-adjusted goals, which is mainly producing income. You could have other goals, legacy, charity, but that's your goal. And if meeting your goal is your primary purpose, what do you probably value more than anything else? Predictability. So when you think about its role in your portfolio, even if you think that it has the potential to become a store of value, how predictable is that? And the same goes with gold. What if all these governments change their mind? Especially in gold, they could go to Bitcoin. Bitcoin, they could go to gold. There could be something else that comes along that is a better store of value, maybe a better currency. It's not that Bitcoin doesn't have the potential to be a store of value. And it might even be some combination that because it does have a baseline store of value, again, but when you think of those terms, it's a pretty tenuous place to be. Let me put it this way. If you buy the S&P 500, it might not be super diversified, very tech heavy. It's market cap weighted, meaning large companies weigh more, but fairly diversified. What holds up that value? Why is it unlikely that the S&P 500 would ever go to zero? And it really unlikely, depending on where it's coming from, because things get overvalued, undervalued, but it's very unlikely that it drops more than, say, 40% like in 2009. It's because of earnings. Gold and Bitcoin do not produce earnings. They don't produce rent. It's not land you live on. If the S&P 500 has some level of earnings, someone's willing to pay something for them. And at some point, at some price, even during really bad times, money is going to flow there because they want those earnings. The earnings act as a floor that gives it value. When you're dealing with things that are commodity or commodity-like, the whims of people could change. Now, do I think Bitcoin's going to zero? No. And Bitcoin could. Where the pro folks are right, Bitcoin does have a lot of potential, arguably more than gold. But it is less predictable. how much of your retirement income do you want to put on that Bitcoin? I mentioned earlier something about tulip bulbs. This would be an anti-Bitcoin argument. In the 17th century, big tulip bulbs, it was called tulip bulb mania, where these rare tulip bulbs were going for huge, be able to buy really nice houses. They were a currency. And it was simply because people said they had value, they had value. But as you might guess, because it's brought up that eventually the bubble burst and people were left holding worthless or close to worthless tulip bulbs. So when you're talking about the accumulation phase when you're younger, making bets, taking on high risk, high speculative, uncertain investments might be more appropriate. You still need to ask yourself, if I want to reach my goals, how much of my portfolio do I want in more predictable assets? But if you put your money into something like this, you have a lot more time to bounce back. You're able to take on that risk, and you're not taking money out. Part of the struggle with retirement, with the decumulation phase, is that you are taking money out. If you are having to sell something, you want something that has, even over the longer term, has more predictable behavior. We know that that stocks can drop 30, 40%. But we also know, as history has told us, usually with only, within 1 or 2 years or less, but definitely within 3, 4, 5, that they eventually bounce back. And even if you are a hardcore pro-crypto person, how much of your retirement do you want to put in there? And a lot depends on, if you're spending very little of your retirement, you could roll the dice. So some folks often ask, Mark, would you put your parents into crypto? And the answer is, well, most likely no, but not for the reasons you think. It's because most of the time when you're talking about retirement and you're talking about decumulation, I don't like to put more than 3% in any particular kind of risky, more speculative or commodity type investment, because they are just too volatile to a node. Commodities, we know sugar is going to be worth a certain amount, but they can be down for a lot of years. You can have super cycles. So generally, no more than 3% into a basket of commodities, no more than 3% into precious metals and gold, and no more than 3% into Bitcoin. A lot depends on your equity allocation, because those are risky. You have to say, those are risky assets. I want the core of my portfolio to be able to meet my goals and feel comfortable. I would not have my parents in here because in most of those things, because they would be worried too much about it. If 3% of your portfolio is keeping you up at night, and you can meet your goals without it, then why have it there? Predictability matters a lot in retirement. So I think things like gold and Bitcoin can have value, that can add diversification value. It can be a source of diversified return. But if you don't need them to reach your goals, which is your primary goal, then why have it there? So the answer would be, as far as should this be in your portfolio, I think maybe. Be aware of the risks. Be aware that it does, as of now, from what we know, it has a lot more downside potential than a diversified basket of stocks, but it also has a lot more upside potential. And having that more understandable predictability in retirement, when you're decumulating, when you're selling, and sometimes you're forced to sell because of RMDs, required minimum distributions, that's the primary goal in retirement. Financial planning is all about making informed decisions. And if you put some thought into the risk and possible outcomes of all your assets, you're going to get to a better place. Sexy is often less desirable than stable. And sometimes the known, more predictable route is better than trying a unknown shortcut. If you do those things, you're going to have a healthier, wealthier, and happy retirement. Don't forget to hit subscribe. Thanks for tuning in. If you enjoyed this episode, make sure to hit subscribe, leave a review, and share with your friends. Share the love. Make sure they have a healthier, a wealthier, and a happier retirement as well. Also, don't forget to subscribe to our newsletter for free resources and check out our website and social media pages for exclusive content and updates. See you next time.
Sona Financial, LLC, DBA Sona Wealth and Sona Wealth Advisors, is a registered investment advisor with the state of Minnesota. All views, expressions, and opinions included in this communication are subject to change. This communication is not intended as an offer or solicitation to buy, hold, or sell any financial instrument or investment advisory services. Any information provided has been obtained from sources considered reliable, but we do not guarantee the accuracy or completeness of any description of securities, markets, or developments mentioned.